Hi everyone, welcome to another weekly Forex forecast for the week ending September 11th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the Euro USD, the Pound USD, the Dollar Yen, as well as the New Zealand Dollar versus the US Dollar. And we're going to wrap things up with gold or XAUUSD. We're seeing a lot of consolidation out there, but I'll show you a few of the patterns I'm watching as to how I'm playing that consolidation over the next couple of weeks. Alright, so let's get started right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up we have the Euro USD, and this is one that I bought back here when it was breaking out from consolidation. So we had this rally through here, consolidation, and then we had the breakout. I got long back here and exited back here on this candle once we got this sell off through here. I also mentioned that in the members area. Now I also shorted the pair through this area and rebought on this candle right here. Again, all those entries were mentioned in the members area, and I made money on each one. Although last week when I got out, I made only a few pips. So I actually held this through this right here and also on this pullback. Now, the reason I exited is because the euro has lost its momentum. All right, so notice back here how we had this rally and we had this nice momentum. And ever since we got above 1700, we've just started to kind of move sideways. And anytime I see this, I don't like this type of structure after an extended move higher because this does hint at weakness. So yeah, we could see a pop higher, maybe back into the 120 area. But this structure right here hints to me at least that we could see a rotation lower, perhaps to retest that 117 region. Now, if we look at the higher time frames, like the weekly and the monthly, the Euro USD is still holding above that multi-year wedge pattern. So this is the one I've been talking about now for months, and the 116 region is going to be support. So as of right now, all of this consolidation through here that we just looked at is minor compared to the overall chart structure. So 116, as long as we hold above this area on a monthly closing basis, the uptrend is very much intact, and I really only want to look for buying opportunities. If I do short the euro, it's going to be for only a few days. That's not something I would hold for the long term. But for me though, I do want to see this structure break down and perhaps consolidate above 117 or even come back and retest 116 in order to regain some type of shape here that hints at a bullish continuation. So for right now, I'm going to stand aside and just see how this plays out. For the week ahead, 117 is going to be support, 119.70 or so is going to be resistance, with a close above that looking at 120.90. But just keep this upward sloping flag on your chart because I do think this could play a factor over the coming days, just as it has ever since late July. The pound is in a similar situation to the euro, where we just have this consolidation, and even though the uptrend is intact, it has lost some of its momentum over the last few weeks. So we saw this bearish pin bar back here off of the 134.80 area, and then we got this close back above 132.60 last week. So this is the support area I mentioned last week, and you can see where Friday managed to close just above it. However, there is a trend line here, a short-term trend line that could be a factor over the coming days. So if the pound starts to break below this trend line, this could indicate at least a short-term pullback into 129.80. Now, if it holds and we see a rotation higher back into 134.80, that could hint at a move even higher. But just like the euro, again, we're just seeing this grind higher, and a lot of the momentum that we saw back here has been lost. So this one is tricky to trade, and it's also a little bit risky if you're trying to buy the pound, just because we have lost a lot of that momentum that we had earlier in the year. So for me, this is one to just stand aside and see what happens here. I'm not going to be buying it. I'm not going to be selling it. I just want to stand back and see what happens around 132.60 this week. And especially if we do get a close below this trend line somewhere around the 132.60 area. The dollar yen is right where it has been for weeks, but I wanted to point it out simply because it is still holding below that 106 region. So this is the monthly time frame, and this is the wedge pattern I've been talking about now for months. And as you can see, we got a breakdown below this wedge pattern back here. Now, last month held below that region. Okay, so right around 106, maybe 106.20 or 106.40 now. And as long as this holds on a monthly closing basis, it is intact as resistance. But the reason I wanted to bring it up today is because this somewhat contradicts what we just saw in the euro, pound, and New Zealand dollar. Because if the dollar is going to weaken all the way down here to 101, which if this 106.40 area holds as resistance, that's a very real possibility. But if the dollar yen is set to weaken toward 101, how can the euro, the pound, and New Zealand dollar sell off against the US dollar? And that's a great question, which is why I'm waiting for clarity on all of these pairs, including the dollar yen, because even though right now the pair is holding below this region, you can even see where this month touched right off of the bottom of this multi-year wedge pattern. All right, so right now I'm just waiting for clarity on all of these markets to see where things are going to go. The reason I do want to talk about the dollar yen though is because there is a lot of potential here if we do start to see the pair weaken and start to take out some of these lows. Now, what I would look for here is if we look at the weekly time frame, you'll see that ever since this March low back here, there could be a trend line that we could draw connecting this March low and this recent one back here in July. So right now, if we do see the dollar yen start to break below this trend line and carve the first lower low within this series, that could be an indication that it's going to head lower toward 101. Now at the same time on the monthly time frame, if we do get a monthly close back inside of this wedge pattern, it would indicate that this down here was a false break, and it would also tell us that a close above this wedge resistance could send the pair higher. But again, right now, this is something I'm just waiting on because I need more information in order to make a decision. The New Zealand dollar, just like the euro and the pound, is also holding above key support right around 67. Although I would argue that the structure here, ever since these swing lows back here, is starting to hint at some weakness going forward. So if we draw a trend line off of this swing high back here, you'll notice that we have what could be a rising wedge pattern. And I could actually extend this lower level to some of these lows back here in March when we had that big sell-off. Now, this doesn't mean that the New Zealand dollar will weaken over the coming days and weeks. However, it is something to keep an eye on. So if you're looking to buy through here around the 67 area, just keep this structure in mind because this could hint at a pullback over the coming days. So right now, buyers would have to invalidate the top of this level. So they'd have to break through the top of this wedge pattern in order to expose that 69.40 area. So as of right now, I'm not buying this one. I'm not selling it. I'm standing aside just like on the euro and just like on the pound to see where this goes. We just don't have enough information here to know if we are going to get a continuation higher up toward 69.40 or if this rising wedge is going to play out and we're going to get a break lower over the coming days. Again, the uptrend here is very much intact as of today, but this structure right here does hint at a possible pullback. Now, if we do get a break below this wedge support, we could see a move down into some of these recent lows, perhaps around 65. And if we get below that, keep an eye on 63.80. That would be the next key level below 65. Again, all of this hinges on whether or not we get a close below that wedge support somewhere around the 66 handle. And last but not least, we have gold, or XAUUSD in this case. And this one is really simple in that 1900 is still support, and this is the level I've been talking about ever since we got this sell-off back here. And right now, as far as the upside, buyers need to carve a higher high in order for us to see a pushback to 2015 and perhaps 2075. Because notice right now within this consolidation, if I zoom in, you can see where we've had these lower highs ever since 2075. So we had this high back here, we then had a lower high, and we had another lower high. And during this whole time, 1900 is holding as support. So going forward, 1900 remains support, and we need to see buyers take out this recent high back here in order to form the first higher high in this series, and only then can we possibly see a break above 2015 and maybe a run at 2075. Alternatively, if we see a daily and especially weekly close below the $1,900 area, that could signal weakness and expose some of these lower levels, like perhaps some of these highs back here, right around the $1,800 mark. But as of right now, 1900 is intact as support. And again, buyers need to carve a first higher high, take out this last one back here in order for us to see a run at 2015 and perhaps higher. But if we look at the longer term time frame here, the uptrend is still very much intact, which is why anybody selling this up here, you have to be really careful, because gold is still forming higher highs and higher lows. And in fact, that's been the case for the last few years. So 1900, which was the previous all-time high, is support. And we need to see buyers take out that area right around 2000, perhaps just below it, in order for gold to regain some momentum and come up and retest 2015 and perhaps 2075. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.